one or the white one?
Why don't you do the black one on this one? That mic.
I'm gonna print some check.
The hot
Okay,
mic.
thank you. Hot mic.
The hot mic.
Hot mic, yeah.
Hello.
That work?
I just unfollowed Russell. I'm just so sick of his. We have a guy that's in our industry,
Uh-huh.
and he can't stop blogging these just ultra liberal. And he's not a stupid person. This is what
He's
surprises
ultra
me.
liberal nuts.
Yeah, he's screaming about she won by 240,000 votes. Why is she not president? The electoral system is so fucked up. It's like, no, it's not. It keeps
No,
Florida and
electoral-
California from running the whole country.
Right.
For everybody
Basically,
else.
Yeah, California happened to be over.
It would be over. Yeah, not
30 million people.
That's what we're talking about. California succeeding from the union.
Good, go ahead.
Sixth largest economy.
Yeah.
No, but that's the whole thing. The tech sector. Look at the Nasdaq. The Nasdaq's down because he's not. I got it right here. They kind of went into why the tech industry will suffer. Silicon
hope
Valley
not.
raises alarm over policies.
Yeah, apparently he's not as big a tech
Let's just
person.
bat this stuff around for
Yep.
for 4 or 5 segments.
All right, that's right. So how we do this? We've got 5 hard breaks.
We have 5 hard breaks now.
5 hard breaks. Yeah.
Whoa.
We have
That's in my contract.
although so it's 7:40 is the first one, or are we back down again?
7:10 actually.
So 7:10.
But these are your commercials or other people's commercials? They're
A
It's
combination of both.
So we have a shorter first and a really short wrap up at the end, and then in between we've got 3 at around 9 minutes. So we get the minutes in, but we
Wow.
just have to kind of so kind of what we've been doing is we'll do.
like hi. Okay.
We'll do a tease. We'll talk in more generalities in the first segment. So we should just batter around a bunch of
What
stuff,
we're gonna talk
but
about.
don't drill deep in the first segment. In the
Yeah.
second segment, we've got 9, 8:40, which is basically 9, and 9 again. So then we got 2, 3, and 4. We can really drill down deep, and then the 5 minutes at the end, we just wrap it up. Just a
Got it.
quick wrap up, yuck up, say some jokes.
Have some fun.
Tell
Is the listenership up or
tell
down?
Edward that he's
No.
starting to look like Donald Trump because he goes to Tan Bella too much.
Yeah.
Nice.
and I need the 2.
You're orange.
I haven't been there for a week or 2.
No, I can tell you haven't.
Yeah.
But when you went to
spray-
Hawaii, you
I
did.
hope you spray tan.
That's what I've been doing. Yeah, and they do a
Safe
good
to
job.
safe to spray tan, I guess.
Yeah.
Yeah.
It's all water based.
Right. Right. No, it's fine. Yeah.
They do a good job because you just stand there and go
That's
and
so
turn around. So it does an even job. My wife is very particular, and she goes, "That's actually a pretty good job."
Wow.
Yeah.
You don't go naked, do you? I don't want that image in my head. Don't tell me. Stop. Sorry.
Naked as a jaybird.
I'm warming me up. Sorry. I don't. Let's just burn that out of our minds right now. Yeah.
Well. Okay, you guys ready?
Yep.
All right, here we go. There we go. Ready? Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hunt of Pacific Private Money, one of California's fastest-growing mortgage investment firms, and welcoming back Lou Botmal of LPL Financial. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 tanning certificates. Yes, we are giving some tanning certificates from Tan Bella, because the sponsor of this segment is Tan Bella.
Nice.
And they got
Well, that's a good reason.
yeah,
Awesome.
Free prizes.
free prizes. And
Rain's coming.
that's right. Yeah. 2 locations in San Francisco and 1 in Marin. Today's trivia theme is just miscellaneous trivia. So we've got a lot of stuff that we're going to cover in the next few segments.
Yeah, is anybody
Anybody who
tired?
know, and anyone who who won the election?
Anybody tired of talking about the election yet? I mean,
Yeah.
it's, there's some awesome, some stock market and bond and other issues, and so we got Lou here to talk about that. So Lou, you got some interesting stuff to start the show with?
Oh no, I think when you look at what's happened the last 2 weeks and the amount of market movement, it's similar to what we had in 2008. The last time we saw a movement this severe in the stock market. So we'll go through it real quick. But the other thing was, I don't think people understand what the overnight market is. There's a lot of stuff on TV the night of the election when the market was
Yeah.
tanking.
Right, what was that about?
Yeah,
The
Dow
Dow futures being down 800.
And I was thinking,
thought we
how
were
do I
all-
buy?
I mean,
Right.
people were calling me in a panic, that evening, and then the next day the stock market actually goes up over 200 points.
Yeah, can you explain that? Because as it was going down 800, I was thinking, how do I buy at that point?
Well, the after hours market's really a futures market. It's kind of like buying options, and not that many people participate in it. It's under a few hundred people, really.
Why did they even
Well, it's a way that a lot of hedge funds and a lot of other companies gain access to the markets after hours and make some moves, which we all know from a few years ago. Remember the mutual fund scandal? They don't let you do that. Remember mutual funds? And back it was in 2005. They were trading mutual funds at night after they closed business based on the market movements. So the futures market's not like that. It's not like you're buying something at a certain price. You're basically making wagers on where the market's going to open the next day.
So
it's the futures market.
Is it literally a few hundred people, not like
Yes.
millions
No.
of people?
No. I mean, no. It represents a lot of people. There's not. The market's not open.
Right.
There's not active trading going on. Specialists aren't at the desk. It's basically people making wagers of it, and it's almost an approximation of what's going to happen. You watch it every morning on CNBC or Bloomberg. They talk about the future value versus the market breadth and what's happening. Oh, we expect the open to be X, Y, or Z. Remember, no one can mark the close or mark the open themselves as traders. The market does that for you. So that's where regulation comes in. That's what people are kind of missing. Now, I could logically see the market opening down 700 points based on the facts and figures we're getting about Hillary's representation out of the polls. Everyone expected her to win, especially out here in California where we're located. That's just the way it was going. So when the surprise happened, everyone's like, "Oh no, now what?"
Well, uncertainty.
But but the media makes it appear that the stock market's crashing. I mean, my wife literally thought the stock market was crashing because she doesn't know, and I gotta imagine that the greater percentage of the American population doesn't know, but they're watching it on CNN.
Right. No, CNN was quoting it. I mean, what did crash was the Asian markets. Remember, it's all about China. It's in all the time. So China,
and they're ahead of us. So
they're ahead of us. So they're 17 hours ahead, right? Yeah. So their market did crash. It was down 5% that day, and hasn't recovered as much as ours during this week because, they think that unfair trade balance is going to be in play.
The NAFTA.
Right. I mean, he had a phone call from the president of China right after he won. Remember he went on, I think, midnight our time.
Does he speak Chinese?
No, I think there's a translator involved.
Okay,
they're warming up to it. So it's pretty interesting what's happening so far.
Wow, that's just crazy. So, but the reality of it is then a day later, Thursday, Friday, we got stocks at all-time highs, and we're going to talk about some of the expectations now, because I know when I talk a little bit in the futures in the next segment about my business in real estate, there were both like pros and cons as I could see them looking ahead if Hillary won, and there's also pros and cons for me with Trump winning, and so it's
and interest rates have already gone up.
Right. No, I think we're. The bond market's not open on Friday. Yesterday, so it's open. It closed on Thursday, 2.15% on the 10-year Treasury, and I think when I met you guys today, the municipal market where you don't pay taxes on bond interest has absolutely crashed, almost down a 1.5 points.
Just because they think that he's going to lower taxes.
Lower taxes. That's significant. You got to remember too that the Congress and the Senate's also Republican controlled now too. So he doesn't see a lot of opposition. I mean, Elizabeth Warren, who's been on TV, rallying against the banking system the last 3 or 4 years, has been doing an admirable job, but now she doesn't have a job anymore. She's not the majority leader of the banking committee, and she has to get it through the Republican Senate. That's going to be really hard. So the policies and positions that have been in place the last 3 years, including Obamacare, bank regulation, the only thing that's interesting is he is talking about bringing back the Glass-Steagall Act. You guys know banking, and that's where
Clinton got rid of that.
Clinton got rid of that, and that's where you basically, if you heard the earnings reports of several large banks, including J.P. Morgan, they said, hey, we've been making money trading bonds, trading futures, all that stuff, trading mortgages, and all those things. They wouldn't be able to do that anymore. There'd just be a bank, and there'd be an outside investment firm. So that's going to change the landscape if that's imposed. A lot of the stuff is if, not when. So,
all right, guys, we're going to cut to our first commercial break. Before we do, get a load of this. Come aboard Hornblower Cruises for a one-of-a-kind Thanksgiving experience with spectacular views, live entertainment, and a gourmet holiday dinner. That's an interesting way to spend Thanksgiving.
Absolutely.
Hornblower. Check them out. Book your reservation today at hornblower.com. Mark and I have been on the Hornblower. You have
our wives.
Sounds romantic.
Well, not
no, with our wives.
With our wives.
Right. Sorry. Mental image.
Such a funny guy. All right, so we're going to cut to our first one. Here we go. Here's our first trivia question. What is the most visited tourist spot in France? So think about everything you know about France and think about what is the most visited tourist spot in France. The first caller with the correct answer is going to win a free certificate to Tan Bella, and that certificate is actually good for 3 tanning services. check them out at tanbella.com, and you can call 888-912-1190 to see if you're a winner. You got to give us the correct answer first. All right? Stay with us because you're listening to The Best of Investing, and we're going to be right back. On the money.
Nice.
So now we're
Get
at 9
better.
minutes.
Yeah.
Yeah, this will be a nice one. So yeah, so we can get into the get a little deeper into the meat. So was it? So it's really obviously the stock market doesn't like surprises. Everyone thought
Right.
Hillary was going
I
to
thought
win.
she
So
was gonna
the stock market indexes theoretically were based on the presumption of a Clinton win and what would happen. And
Oh,
so,
absolutely, yeah. That's so.
Status
that.
quo.
And I mean, again, the continuation of the policies that were currently in place. So it's kind of like the transition of Reagan to George Bush the first, where everyone's like, okay, we know what we're getting, where we're headed, and then all of a sudden you now we're talking about who's going to run the Treasury. We're talking about Jamie Dimon from J.P. Morgan being nodded to take over the Treasury.
oh, I hated that guy when I don't know of him really.
The
I don't
JP
know
Morgan
him,
guy.
but I just know of him. And
Yeah,
when
it's
I
JP.
read about him, it just didn't. But again, I don't know. I might have read something that was slanted. But
Right, no, that's a problem. It's like, he doesn't have any political capital. I mean, most people, like Barack Obama, didn't have a ton of political capital either,
Yeah.
but he's pretty strong inside the Democratic Party. Trump owes nothing to anyone.
Yeah.
He's not. I mean, he's not beholden to the Koch brothers. He's not
what do
beholden
you think
to
of
the.
Devon if he was put in the Treasury? What's the side of the deck? Would it be a good move or a scary move?
I don't know, but I mean, everyone considers J.P. Dimon to be a great person, ran a great bank, but
Oh, really?
yeah, but I think there might be some better choices too. I don't know what the lineup is, but they wanted to slant in one way. Look, this election was about the Supreme Court. That's what everybody's all about. And
Yeah,
I mean,
thank goodness.
a lot of churches were saying, hey, Scalia's dead. We better do something to preserve our legacy here. So and then
What do you want to get? What do you want to start with on? What do you think?
My whole thing was about Hillary winning. So let me go back here real quick.
Really?
Oops, got to change the whole thing now.
I had to write this last week to get it approved. So it's about how not to listen to elections and stay invested over time. So you tell me when you guys want me to do that.
Okay.
I got a couple paragraphs on that.
And
So
don't forget your email question is what about taxes?
Right.
And
Okay.
Mark, I want to buy a new house, but I haven't sold my current house, and I don't think I can qualify for a loan with the new house until my old one is sold. Can you help me with this?
Good. Okay. Well, let's just start by just repeating what I just said. Between that thing about just the stock market is doesn't like surprises, and the stock prices were based on the expectation that Hillary was going to win.
Okay.
Yep.
Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hunt and Lou Botmal. First trivia question was, what is the most visited tourist spot in France?
Eiffel Tower.
That's what I would have thought. What is it?
It's the Louvre's not in France. So
No. But the Louvre's in France.
No, it is.
Yeah.
Is it the Louvre?
It's Euro Disney.
Oh, nice.
They just
That's
can't get-
cheating.
they just-
That's
hey, I'm
cheating.
just saying,
That's
it's
cheating.
they just can't get enough of Mickey.
Oh.
All right, so Mark, before we get into you, I just want to make a quick mention here too. The Cityscape Viewing Lounge at the Hilton in San Francisco Union Square is awesome. First of all, the food is very good. You also have 360-degree views that are out of this world. You go to the very top, look around, you get to see Golden Gate Bridge, see AT&T Park, you see everything. So check them out, the Cityscape Viewing Lounge at the Hilton San Francisco Union Square. Right, Mark,
So,
continue.
well, we're talking about the election and the effects on the investment markets, and many of the markets were roiling this week as a result of the surprise election of Trump for president. And of course, most of us are aware that the stock market indexes are really based on expectations of what's going to happen in the future, and the markets don't like surprises, and that was probably the biggest surprise in gosh, how many decades. So, we talked about last segment about the futures being down as much as 800, but then when the markets finally opened, calmer minds prevailed, and the stocks actually have been up this week. But other markets, Lou, were down considerably, including, you mentioned very quickly, muni bonds. Let's talk about a little bit about why that is, that muni bonds would have dropped so sharply this week on the election of Trump.
Well, since the advent of higher taxes, both in the California state level and the federal level, people parked money or placed cash-like investments to a certain extent inside municipal bonds. Municipal bonds don't pay any state or federal income tax; they're owned in the state of California. So you can buy a University of California bond that supports our university system. It might pay, has a face value of about 5% interest. When you bought it last week, you're probably getting a yield once you paid for the premium of about 2%, maybe 1.75. And right now that's jumped about 2.25 to 2.3 in just a week because people think the taxes are going to go down. Now, Jerry Brown's already said he's not going to drop taxes. But
surprise,
yeah,
That's
no
just
surprise there.
California, though.
That's California, but they think the federal system. Remember, if Obamacare is repealed, a lot of high-income earners pay an Obamacare tax between about $1,200 and upwards of $3,000 in their tax return each year.
Really?
Yeah,
I mean, those people are not.
It's a pickup
paying,
tax over $250,000 pays for Obamacare.
Um,
So if that goes away, your taxes go down, and plus
so even if they have insurance.
right. So even if you have insurance, you got to pay the Obamacare.
Okay.
That was implemented when Obamacare came in.
That Medicare investment tax thing, the 3%.
Yeah, right.
Oh, okay.
Yeah, that could go away effectively. Also, we can go
Hopefully.
from 39% down to 35% federal taxes. So
Big deal.
Yeah.
From 39 to 35.
well, and some people
Hey,
think
every
that
little bit helps.
every little bit helps, but it's enough. It's enough to sway the idea on municipal bonds. Also, if interest rates go up at banks, people will be. I'm rather put my money in a bank anyway. So, that'll level its way out. But we talk about markets around the world. I mean, the emerging markets are really succumbed to the dollar lately. So the euro this week is down to $1.08 again. The dollar's really rallied from a strong position. I mean, just 2 years ago it was $1.33. So what's that mean? I mean, and the Federal Reserve might raise rates again, guys. On the short side, remember, they don't control the 10-year. They don't control mortgage rates. They don't control the 30-year bond. All they control is overnight lending between banks. But if they raise it 25 basis points, when you have Germany paying 25 basis points and Japan paying under 5 basis points, and it's been a net negative yield over the last about 90 days over the summer, what happens? Everyone wants to put their money in the United States, and our dollar just gets stronger. And we're talking about somebody who's protested the trade agreements that have been in place for the last couple of years, and everyone's like, well, what's going to happen now? We have a strong dollar, no one wants to buy our goods, we're not going to trade.
So initially, Lou, I heard that there was a mad rush to buy T-bills, but you said now that the stock market is going up and not down, that trend reversed like almost
Correct.
Immediately.
Absolutely. In the middle of the night,
Yeah.
that happens. So,
Does a lot of it have to do with the fact that just people think, he's so pro-business that'll help corporations, earnings and all that?
Well, you jump through a few things. So locally here, the NASDAQ didn't do well, which is a San Jose-based index.
Well, that's because Silicon Valley wants to secede from the union.
Well, that's part of it, and he's not a Tesla fan. He's more a coal fan. He's more of an oil and gas type of guy.
Burning cars.
Yeah, exactly.
I
So
say bring coal to California.
right. So these are. I mean, also the other thing too, people forget. It's a pretty simple representation, but under the Barack Obama regime, guns weren't that popular, right? Because guns were popular to buy because people were like, oh, geez, our gun rights are going to be taken away, which never really happened. But now we're seeing the gun stocks tank because Barack Obama is gone and Donald Trump's in charge, and he's a pro-gun guy. So people are like, I'm going to go buy a gun now because I probably keep my gun. So these things are, these are all changing so rapidly. Some U.S. Steel and the biggest thing he's doing. U.S. Steel is rallying because he says, hey, I'm going to rebuild all the bridges and roads and put everybody back to work. So this infrastructure spending is back in focus. They talked about it in 2008, but nothing really happened. But now they're sitting there going, Barack Obama talked about doing it, but never really got it implemented to the extent that they think Trump will.
What about toupee makers? Since everyone wants to look like Trump now.
Well,
I can't testify to him.
Okay.
The biggest challenge for the markets right now, as I see it, is we just don't know what his platform truly is. We've got build a wall, get rid of illegal immigrants, get rid of NAFTA, but and the rebuilding of the infrastructure, which again, is something that he can't necessarily do on his own. He's got to get Congress behind him on much of this.
And here's the interesting thing, excuse me for interrupting, is that they go, well, yeah, but you got a Republican Congress, but he's not really Republican. They don't like him. He was kind of
no one supported him. Paul Ryan's not his best friend, and neither is Mitch McConnell. They met this week. Who knows what they've said? But to your point, this is how This is how specific it's getting right now in the investment markets. Right now, they're wondering who's going to build the wall, because he said Mexico's going to build it, which means a company called CEMEX, which is based in Mexico, has been rallying. Meanwhile, the peso's been tanking, so we should all go to Cabo this Christmas because things have gotten a lot better over there.
Okay.
But also, there's a company called Fluor. It's a big construction provider. It's been rallying a little bit as well. But you're right, Mark. Nobody knows really which direction we're going to go in.
Yeah.
Hopefully, we hear things over the next 70 days or 65 days that give us some clarity as to where we're headed. We think the cabinet might be doing that.
But here's one of the biggest things, and my wife actually pointed this out. She says, well, I think a lot of people are just going to go like, well, I don't know what to do, so I'm going to do nothing. And that's not going to really help anything.
Right, the sitting on the sidelines
Yeah,
mentality is
that's
exactly what a lot of investors with their capital did in 2008 after the Lehman
Yeah.
Brothers meltdown. I mean, I was busy trying to build my trustee investment business at the time. I started Pacific Private Money, in fact, in the summer of 2008, just months before the market meltdown. And for the 6 months following October, November of 2008, and all the financial uncertainty, I mean, I couldn't get any of my investors to put money into anything. You know, they're I'm just going to sit on the sidelines for a while and see how this shakes out.
All right, guys, we're going to cut to another commercial break here. And these hard breaks, the station kind of throws a brick at me and says, hey, go to a break.
All right.
All right, before we do, sail the San Francisco Bay aboard a luxury tall ship with a professional captain and crew, the schooner Frida B. It departs from lovely downtown Sausalito, and you got to check them out at www.schoonerfridab.com or call, a little easier, just call them, 415-331-0444. They have a moonlight sail thing too, so very, very cool company.
Nice.
All right, so here is our second trivia question. Again, this is just miscellaneous trivia, so you have to kind of
Know a lot.
Get your brains going here. According to Japanese legend, a sick person will recover if they fold 1,000 of what type of origami? Right? The first caller with the correct answer is going to win that certificate at Tan Bella for 3 tanning certificates or services. Which, by the way, they have this booth that takes away wrinkles, and that's pretty cool. I'm going to try that. Okay. Call 888-912-1190 to answer that question. Don't touch that dial. The best of investing. We'll be right back. Put it a little over if that's okay.
So you guys can't do the vacation stuff anymore?
Well, you know what? See, I have Dawn handling lighthouse stuff. It's just that we're getting booked like almost every weekend on all the cabins, and so it's
We
really
can't give them
hard
away
to-
anymore.
Yeah, it's kind of tough to give those away.
So let's see. On the next one, we got 840, another longer segment. What else do you?
Get some email.
So I want to go into the whole timing thing. I had one paragraph I should probably read, so I am a little bit compliant.
Okay.
Good.
So,
Yeah,
We can go into your email too.
right. I won't go too far into it, but I'll just talk about something there.
Right?
Okay, right.
This will be an 840 segment under your. Ready, go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hahn and Lou Bottle. Second trivia question. According to Japanese legend, a sick person will recover if they fold 1,000 of what type of origami?
Is it a bird?
That's what I was going to say.
Or a swan? A swan?
No, a crane.
A crane. That's
Yeah,
it.
we're
Okay.
looking for crane. All right, Mark, we actually got an email for you. We're going to shift gears for just a minute here. It says, if I want to buy a house, but I haven't sold my current house yet, and I don't think I can qualify for a loan on the new house until the old one is sold. Can you help me with a loan? Does that make sense?
It does make sense, and what that client is looking for is what's called in the marketplace today a bridge loan. And that's not something that was really needed 10, 15 years ago, because in the real estate heyday where you could borrow money on a credit score, you could continue to buy houses as long as you had good credit, and if you had capital, even better. Nowadays, though, because of Dodd-Frank and the new harsher lending restrictions that banks and conventional lenders have to adhere to, many people find themselves, even if they have good credit and cash in the bank, they don't make quite enough money to qualify under the new stricter ability to repay and debt to income ratios and all the stuff that banks now and loan underwriters have to follow. They find that a borrower, a prospective borrower, finds that they're told, I'm sorry, but you don't qualify for 2 simultaneous mortgages, at least based on the property they currently own and the property they wish to purchase. So that's a situation. Even if they have the down payment, oftentimes they can't get that loan to buy the house. And well, why would you want to buy 2 houses? Well, it's not that you want to buy 2 houses; it's that you don't want to move twice. So, maybe you want to buy the home you want to move into first, move into it, then clean up, maybe even remodel, and then sell your prior home. That's something that a lot of people want to do.
Yeah, because you don't want to sell a house and then go, okay, now let's go rush and find another house.
Or all your equity, you don't have a down payment or you don't have a lot of cash, and you've got a tremendous amount of equity, hundreds of thousands of dollars maybe, tied up in your existing home, and you kind of need that equity for the down payment on your target home. Then what do? That's a similar situation. And so again, in that case, you can also use what's called a bridge loan, and that's one of our most popular loan products at Pacific Private Money. We are available to do bridge loans for people because we can lend based on fewer lending restrictions than the banks have to adhere to. We do have to abide with many of the Dodd-Frank lending restrictions that are predatory in nature, but we are able to do a very fast and quick closing loan on your target property. And if we need to, if you need up to 100% financing to acquire that target property, we can use your existing property's equity and do what we call cross-collateralize. So in either case, even if you have the down payment and we're told by your bank, no, you don't qualify to have 2 simultaneous mortgages, or if you don't have the down payment and want to buy your target property without selling your existing home first, in either of those situations, we can provide a bridge loan under an exemption from certain Dodd-Frank guidelines that allow us to make what's called a temporary loan. Temporary is defined as less than 12 months, so we make it 11. We call it our 11-month bridge, called our fast and easy bridge loan. So for more information about that, give us a call, Pacific Private Money, 415-883-2150, or go to our website, pacificprivatemoney.com, for more information.
Very good. Lou, an email comes in, probably right around your expertise here. It says, what about taxes now after the election?
Well, taxes after the election are going to be in play because people figure with a Republican, Congress, Senate, and presidency, as we mentioned, it's not going to take much for these people who don't like taxes to get rid of them. So,
or at least lower them.
Lower them.
It'd be great if they got rid of them, but that's not likely.
Yeah, exactly. Well, someone's got to pay a bill every once in a while. Bullets aren't free, as they say about the military.
Well, plus they have to pay. If they do those infrastructure, that's got to be paid for. So
absolutely.
And are we going to go increase and ratchet up our deficit spending?
Yeah, I was going to say, are we going to spend our way out of this?
No. Let me scare you with one stat real quick.
Okay.
The United States government is a AA rated institution right now, correct?
Yeah.
On its currency.
Not triple.
Not AAA, AA. There's actually, I think, 3 companies left that are still AAA.
Really?
That's
General
it.
Electric, probably.
General Electric. I think. I forget the other ones. I think most General Mills. Anyway, but so how much debt do we have out there right now?
$19 trillion.
Almost 20 trillion now. And they're trying to raise this They're trying to raise this ceiling by they think a couple more billions or trillions of dollars.
Just make it a quadrillion, and then you don't have
Okay.
to worry about it for about 50 years. Go ahead.
Now, if you had to sell every stock at its current price in the stock market, and you liquidated everything, how much money would you come up with?
15 trillion.
About 23 trillion.
Oh, really?
About 23
That's
trillion.
good.
That's well.
I mean, that's in the positive then, right?
If you open a margin account with an investment company, you have to have what type of debt? 50%. We don't even have that. So as we talk about, and under the last several Republican administrations, the only thing that's gone up is the debt. So, and at some point, if the debt gets up high enough, like around $25 trillion, which is projected under the current Trump plan that was proposed during the election cycle, which who knows what it's going to be, but it would be down to a single A rating pretty quick in our currency, and our
Which theoretically would mean interest rates would go up.
correct.
In theory. Okay.
Right. So now it's time to stress a little bit, and we talk about tax policy. It's not going to go to zero. It's probably going to moderate a little bit. And the bigger question when you get into tax policy is every dollar it's taxed goes 57 cents to Medicare, about 30 cents to Social Security, and then about 20 cents to military spending.
What was that movie? Blade Runner, was that the one where they kill everybody when they hit 35? Or was that different?
Soil and Grain.
No, there's some movie with.
Well, how much goes to the debt though? What debt service though?
It doesn't. The debt just keeps accumulating. They've never paid down the debt. They balanced the budget under Clinton, but they didn't pay off the debt. The debt was still there.
Negative
Now, in trying to get out of 2008, I mean, they had to borrow more money. You know, Barack Obama, under his administration, has developed more debt, and most of that occurred between 2008, 9, and 10.
Some of that wasn't his fault.
No, it's
a lot
not.
of it wasn't.
And the Fed had to do the buyback, the bond buyback program. That increased the debt. So
just print more money.
Well,
and pay it off.
no, but Edward, to your point, if something, to leverage something, to Mark's point earlier about bridging a loan, if something grows from $500,000 of value to $1 million of value, you can apply more leverage to that item. And there is this theory that if we grow our way out of this, more wealth will be distributed, and we can sell off more assets or refinance them and then get better off. But eventually someone's going to pay the piper. We don't know when it's going to be, but tax policies is what drives it. We collect about $4.3 to $4.7 trillion in taxes a year. So it would take us a long time to pay off the debt and pay our bills.
As Spicoli would say in Fast Times at Ridgemont High, righteous box.
Right.
All right, guys, we cut to our last trivia question. We'll have one more commercial break after this. Before we do, I want to make a quick mention also, paintball. If you go to our website, you can click on paintball icon and get something like 80% off, and it makes great gifts for Christmas. So those come around the corner. All right, so this one, a lot of women are going to cringe with this one. The gestation period for which large animal is 8 months? Okay, that's our question. Call 888.
And we're guys.
911.
I don't think
I
we're
know.
supposed to know.
I don't know what my gestation period is.
They're still working on it.
Yeah, I had some steak last night. It's probably just about like 10 hours worth. Okay, so the gestation period for which large animal is 8 months, all right? The first caller with the correct answer wins a free certificate at Tan Bella for 3 tanning services. 888-912-1190. Don't touch that dial. The best of investing will be right back.
So we do 9 minutes more.
Yes.
Okay.
This is our longest one, 9:19.
And we do want to get to a deal of the week if you've got.
Well, I can start off and probably finish it
Okay.
under 2 minutes,
Okay.
10 seconds or whatever, then we get the deal of the week. And
Okay.
then we do the last 5 minutes. Are you still doing the sports
I
one
wanted-
too?
Yeah, I did that with Bruce just before you guys came.
I wanted to talk a little bit about just the kind of double-edged sword of of both candidates.
Yeah.
From from my company, which is
Yeah, that's right, because you said it was good.
typical
news, bad news.
financial. Yeah, I mean we're a financial company, and here were the things I was looking at.
Yeah, that'd be interesting. Okay, you guys ready?
We're on if you're on.
Okay. So we'll go back to you, Lou,
Yeah, I'll do a real quick paragraph, and we'll go from there.
and then Mark, for the deal of the week, there's that one in Saratoga. That's kind of an interesting one.
Yeah, what was the amount on that one? Is that the
$1.8 billion, purchase price 2.4, and the thing that got messed up was the fact that the broker listed the property for sale instead of the imputed rental income.
right?
Oops.
Yeah, kind of one of those crazy things. Okay, here we go. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Mark Hoff and Lou Bobo. So here is our last trivia question. The gestation period for which large animal is 8 months?
Walrus.
Whale.
Hippopotamus.
Oh,
Can you
man,
imagine
so
being
close.
the mother hippopotamus for 8 months? I think I'd rather be a gerbil and just do it in 3 weeks. Lou, you have a couple more things.
Well, I want to get away from the gloom and doom of this election cycle and talk about a few things here. And you got to ask yourself. Last week, you probably went out. Probably went to the market. Probably did a little bit of shopping. Some people this time of year are planning their travel and anticipate the weight gain that occurs during this period of the year. So we're preparing for those things. And we all know the election stops, so what will fill the void that the election cycle commercials have left in our brains? I bet it's
Christmas
gonna
commercials.
be, right. I bet it's going to be things regarding food, shopping, for gifts, and fulfilling that special desire to visit Disneyland at Christmas. Oh God. Spending doesn't take a backseat to anything that we're concerned about right now, or we've been talking about. So the economy is not going to cease or shut down. If you want to talk about something real quick, close your eyes real fast. Well, you might be driving, don't do that. But close your eyes real quick. And the headline of the Wall Street Journal on the 1st of November read, Dow falls third month in a row. The discussion of the S&P falling 1.9% in October. The NASDAQ showing a monthly decline of 2.3%. That was just a week ago, people, or a little more than a week ago.
Yeah.
And here I'm on an investment CEO talking about a bad month of October, and we've had a rally since.
Yeah.
So it just goes to show that don't be concerned about the noise you hear, watching people play with election maps all day long, or people talking about what their opinions are, or what pollsters say, because no one really knows anything. We do know that over a 10-year time frame, by and large, the markets go up. Real estate goes up over that. A real estate agent told me a long time ago that real estate goes up for 6 years and goes down, or stays steady for 4, and then comes back. And I think everyone's probably preempting themselves. I think the market's a little dislocated right now because we bought into a market and we're not buying on the fundamentals of stocks going up because they're doing better. They're doing it in anticipation of that happening because taxes are going to go away. We're going to repatriate all these assets. These are all ideas, much like the election results were ideas in people's heads just 2 weeks ago. And let me tell you, someone else was supposed to win, so no one really knows anything.
Yeah, and so Lou, you're a financial advisor, and your practice was probably turned on its head this past week. Even my business, and I'm in the lending business and the investing business, and in many ways, I'm nervous about the future, even though I've historically voted Republican and I'm generally conservative on certainly economic matters, but I expected Hillary to win. And what I was afraid of with Hillary winning, well, first of all, what I was assured with her winning was Dodd-Frank was not going to be repealed, which
Right.
And Dodd-Frank's actually been good for our business model because the regulators over-tightened access to credit, which allowed companies, privately funded companies like Pacific Private Money to thrive. What I was nervous about was what I kept reading that, the Dodd-Frank regulations are only about 1/3 implemented. There's still a lot of law that hasn't, been implemented yet, and the thought of that's actually scary because, would they further tighten credit? Okay, well, a week later now, Donald Trump's been elected. Well, what do I have to fear being in my particular line of business of investments and lending? Well, what if they repeal the majority of Dodd-Frank, and what if banks go back to imprudent lending practices, and now all of a sudden demand for money from companies like mine goes down, and is that a bad thing? Well, someone listening might say, well, not for the consumer, because you guys charge high rates and fees, and isn't that a good thing? Well, but look at the flip side. As an investment company, we've been providing opportunities for people to earn high yields on their savings. I mean, we've been paying out 8% and higher for the last 3.5 years in our fund, and for years before that on individual notes, 9 and even 10%. So we've been providing a really important investment option and a diversification alternative investment option for hundreds of people. And you multiply that by the hundreds of companies like ours, and that goes away. So I'm really nervous for my various investors.
Except for one thing though, is even if Dodd-Frank, let's say, goes away, banks can't compete with you for speed, no matter
No,
how
it doesn't
much.
kill the business model. No, it doesn't. But it just, again, it's, I'm talking about anxiety, not necessarily, practical, real world. Okay, let's calm down. Let's all take a breath here. But it's just, really, almost no one. The point being is really almost no one in investing has been spared from the anxieties because there's just so much we don't know right now. And for my real belief is that there's really no way they're going to repeal the bulk of Dodd-Frank. Too much of it. It's been many years of it ingrained in the regulations.
I was going to say, it's still fresh in people's mind that the stupidity that went on in the lending practices from 2008.
Yeah, and the Journal quoted today, they said that what they might do is lift Dodd-Frank from small banks, and they have the stress test. So you might have this litmus test, like if you have so many in assets, you're part of the stress test regime. If you don't have that many assets, like regional banks, you're not part of the stress test regime. So the handcuffs might come off the smaller banks and stay with the larger banks, because those are the ones that really abuse all the issues.
Right, and when we say Dodd-Frank, we don't really, there is no Dodd-Frank law. There are thousands of new regulations that were imposed under the Dodd-Frank bill, which was a huge bill. So really what we're more specifically, more accurately talking about is there are many, many, many new regulations that have been put into place thanks to Dodd-Frank, and many of them were overreaching. And so we're talking about some of those overreaching laws and regulations hopefully will be pulled back. I mean, there's one in particular that I know about. They've essentially, the new regulations have made it illegal to make an equity-only loan to somebody who wants to borrow against the equity in their home if they're on a fixed income and can't show the ability to afford the monthly payments. And so that might sound like a prudent regulation to protect consumers from predatory lenders, but let's just say you're not stupid and you own a home worth $1 million and you have a $200,000 loan, you've been paying it down for years at some low interest rate. You want to, but maybe you want to downsize, you want to move, and your home hasn't been remodeled in a while, and you have an opportunity to make a profit by remodeling your home. You'll be able to sell it for much more. You could put $200,000 into it, maybe make an additional $200,000 to $400,000 in profits. So you call even someone like Pacific Private Money and say, well, I want to borrow against the equity in my home, and we discover, well, you don't actually have the right ratios to be able to afford to make the monthly payments. Well, I'm not going to pay you. I'm going to sell my home. Well, I can't make that loan.
Well, let's make it even more crazy. Forget the fact about making a profit. What happens if you have to go to the hospital and you need an operation and you don't have enough insurance or whatever, and you need cash, otherwise you're going to die from not getting the operation, and I'm sorry, we can't make you the loan.
Right, there's been a number of unintended consequences of the Dodd-Frank regulations that have been overreaching, and those are the ones that I hope that a new administration will take a look at. Now, will they? I don't know. They're going to have a lot on their plate, so it's going to be interesting to see.
Yeah, because there's a whole bunch of other stuff that they need to look at also.
Like the DOL.
And as we said before the show, is Trump's got enough money, he's got enough fame, everybody knows who he is. It seems like what's going to be important to him for, let's call it for narcissistic reasons. I think he wants to do a good job just so that his legacy doesn't get messed up. He wants to be known as, man, I was the man. I'm another George Washington incarnate.
He wants to be the next Ronald Reagan.
Yeah,
so
Ronald Reagan.
Everyone goes back and goes, oh gosh, everything was so good back then. But the thing about Ronald Reagan is we came out of a real bad economy into a good one, and right now things have been stable and okay.
But they also messed up with the Tax Reform Act of '86, where they got rid of a lot of the tax shelter type.
Right, that was all
really
gone.
Destroyed a lot of real estate. Okay,
Yeah.
Stay with us. The Best of Investing is going to be right back. Okay, so we just have one quick 5-minute segment to just sort of wrap things up.
Yep.
No trivia question.
No, not on this one because.
Yeah, you can ask me. I can do a deal of the week pretty fast.
Yeah.
Say, Mark, before we go, you got a deal of the week.
Exactly.
Elizabeth Warren.
Tell me again on that. So the 1.8, 2.4, he had other property that was rented out.
No. What happened was he's selling his old residence to buy this one,
Yeah.
and the bank said, well, if we impute a rental of income from the old house, which he was never going to rent to begin with, then you qualify.
Oh, so he represented to them that he was just going to, because he had the down payment, he was just going to buy the target property.
Yeah.
And not sell the existing home.
Or they knew he was going to sell it, but it was just all screwy from that end of it.
Yeah.
And you guys took it over.
So he used the imputed rental value to be able to qualify with the debt ratios
Correct.
of owning two homes at the same time.
That's right, and he would have qualified. But then when the bank at the last minute looked and found out, wait a minute, you listed the house for sale, now you don't have the rental, you're not going to have the rental income, but he has $1.2 million equity in that house, so he can almost pay cash for the other house. That's what's so crazy. But they think he's going to buy a boat with the money.
Is it hard to realize that housing prices could actually go up? It's pretty hard to fathom at this point.
Yeah.
For most of my clients.
Hard to say. Okay, here you go. Welcome back to the best of investing. Last time for today, I'm Edward Brown, your host, along with Mark Hoff and Lou Botmal. Mark, you got a deal of the week?
Well, I do, and it's another example of a bridge loan. We've been doing a lot of them lately, and so this one was a $2.4 million home purchase. The loan that they needed was $1.8 million, and this family had very high credit scores and cash,
bank approval,
right? And cash for the down payment on this $2.4 million home. So why did their bank financing get tied up? Well, as it turns out, remember we talked about earlier in the show that banks need to really look at your income and impute debt ratios, debt to income ratios. They have to take all these calculations into consideration because they're not allowed to make you a loan that you can't demonstrate the ability to afford the monthly payments on that loan. And so this family was making enough, just barely enough money to afford to go out and buy a new home before they sold their existing home. And one of the ways that this particular mortgage broker was able to get their ratios in line and get the approval was by imputing a rental value of their existing home. In other words, they assumed that the borrower was going to buy the new home, move into it, but not sell the existing home. So they got the debt ratios to where they needed to be by imputing a rental value. Well, what happened was they put that home on the market, and the bank found out, and they could no longer use that value. So they came to us, and we were able to make them a loan for $1.8 million and close the deal. And it's they can pay us back as soon as they're able to fix that problem. And the reason is we don't, our loans have no prepayment penalty. So
what did they assume that the guy was going to sell the house and buy a boat with it? That's a lot of money that he had, because he had a lot of equity in that property.
Well, it was, and again, he wasn't happy to have to come to us. It would have been, obviously better for him. But this is an example of, there are hundreds of transactions that, that run into trouble every week, every month in the Bay Area, actually throughout all of California. And so we exist to, save a deal when it looks like something's gone amiss.
All right. Again, how do people get a hold of you?
So the easiest way, of course, is our website, pacificprivatemoney.com, pacificprivatemoney.com. Go there if you want information about how you can get fast, friendly, reliable financing, but also go there if you're interested in mortgage investing, which is a way for you to earn 8% or more on your savings or IRA accounts, because all of the loans we make at Pacific Private Money are funded with private capital. We are a non-bank alternative for real estate financing in Northern California.
And by the way, I did pull some property profiles on a handful of the loans that are in the portfolio, and sure enough, Pacific Private Money is the first mortgage lender. So these are recorded deeds of trust.
Wow,
so
that's awesome.
Not just a trust us, don't worry, your money's going to be invested. No, it really is,
It's the real deal.
It's the real deal.
Lou, did you give your contact information?
So my contact information, again, I have a website, Louis Botmal, or Louis, and the last name is Batmale. You can type that in, and that's going to come up under Google. And you can type in there, it has my email address and my phone number. If you want to review your asset allocation this time, we are doing free reviews this week for people. We've gotten a couple of requests about, well, how much bonds should I own versus stocks? How conservative should I be? In the end, I tell everybody over and over again, Social Security is not going to cover you in retirement. The cost of Medicare supplements might go up under this regime. It's something we're very concerned about right now. So you got to control your own retirement. Also, they're going to probably change the retirement age at some point around here, from 65 to 70 at some point for a lot of different.
And we'll probably have to qualify for it, is my prediction.
Yeah. So our phone number is 415-256-8970.
All right, guys, we're going to cut out for today. Here's our thoughts for the day. Being honest may not get you a lot of friends, but it will always get you the right ones. And don't let people's compliments get to your head, and don't let their criticism get to your heart. I sound like the Wizard of Oz for some reason on that one. And with those words of wisdom, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
So I heard Will Smith give that quote at at an investment conference.
You heard what?
He gave that quote.
Oh, yeah?
Don't let your good deeds go to your heart, and don't let the criticism, or